Hi, good morning. Today we will discuss on accounting standard number 20, earnings per share. Write the heading AS 20, earnings per share. Yes, so we had discussions on interim reporting and then discontinued operations. So we are left over with a few more standards. So we'll complete them. AS 20 deals with earnings per share. Okay, continue writing along with me and then we'll explain. Earnings per share within brackets EPS is a financial ratio that gives the information regarding earning available to each equity share to each equity share. Second point, there are two types of EPS which are to be reported by the enterprises on the face of the statement of profit and loss account. A, basic EPS. B, diluted EPS. Next line. Basic EPS is equal to, it's like a formula, okay, with a numerator denominator. Leave sufficient space on your right hand side. Net profit or loss for the period attributable to equity shareholder divided by weighted average number of equity shares outstanding during the period. Yes, next line. Calculation of net profit or loss for the period. Write that numerator as a heading. Okay, for the period attributable to equity shareholders. Write that numerator as your heading, long heading. Calculation of net profit or loss for the period attributable to equity shareholders. Yes. Number one, calculate net profit or loss for the period to deduct tax. 3. Deduct preference dividend. 'Underneath that, A, underneath preference dividend, mark it as A. Dividend on non-cumulative preference share. Dividend on non-cumulative preference share is deducted if dividend is declared. B, dividend on cumulative preference share is deducted even if declared or not. Next heading, weighted average number of outstanding equity shares. This is computed by adjusting change in equity shares. By adjusting change in equity shares if different classes of shares, different classes of shares, then apportionment apportionment of net profit or loss is done over different classes of shares. Different classes of shares. Yes, let me explain and then we'll discuss with an example, okay, how this basic EPS is arrived at. Now, what did we write? Earnings per share. Now, earnings per share is a financial ratio that gives the information regarding earning available to each equity share. Okay, so for one equity share, how much is the earning made by the enterprise? That information is what is revealed by this financial ratio called as EPS. Okay, EPS, E stands for earnings per share. So for one share, how much is the earning? No, as such, there are two types of EPS. Okay, and in your P&L account, on the face means on the P&L account, you have to give this both the types of EPS. Okay, now what are they? One is basic EPS, and second one is diluted EPS. Now, diluted EPS we will discuss at a later stage because it has various details to be understood, but first we will understand the basic EPS. Okay, now what is basic EPS? EPS is what? Earnings per share. So your numerator will generally be the earnings part and denominator will be the shares part. So net profit or loss for the period attributable to equity shareholder. So whatever the profit which is available to the equity shareholder, the profits which the equity shareholders can enjoy, net profit or loss for the period attributable to equity shareholder divided by weighted average number of equity shares outstanding during the period. It is not just the number of equity shares, it is weighted average number of equity shares. Why weights being assigned is we will discuss at a later stage, where at the time of buyback, okay, or some other situations, you assign the weights, okay, weights in the sense based on the number of months. That is called as the weighted average number of shares. Okay, we'll discuss that also. So first, the numerator part is what? Net profit or loss for the period, right? So when you say net profit or loss for the period, you already have the profit from your P&L account or whatever the source is, right? To calculate the net profit or loss for the period. So arrive at the net profit or loss for that financial year. From that profit, reduce the tax part. Okay, if there is any tax, reduce the tax, right? Then later deduct the preference dividend. Okay. Now preference dividend is, see, you would have come across the terms like redeemable preference shares, irredeemable preference shares, cumulative preference shares, non-cumulative preference shares, right? You must have studied these types of shares in your intermediate. So preference shares and equity shares are the class of shares. Now, when you say preference shares, there's something called as cumulative and non-cumulative. Cumulative meaning, if the dividend is not payable in a particular year, it gets accumulated and gets paid in the year when the profits are being seen. Okay. Non-cumulative is the dividend doesn't get accumulated. Okay. Where it will be paid when there is profit. That's it. Okay. Non-cumulative is the dividend is not accumulated, whereas cumulative is it is accumulated. Okay. Now, when I say non-cumulative preference shares, okay, when I say non-cumulative preference shares, dividend on non-cumulative preference share is deducted if dividend is declared. Okay. Only if dividend is declared, you can reduce that dividend on non-cumulative preference shares. Whereas on cumulative preference shares, it is deducted even if declared or not. Okay, whether the dividend has been declared or not declared, dividend on cumulative preference shares alone, it is reduced. Because what did we discuss? For cumulative, the dividend gets accumulated, it gets added up, right? Therefore, whether it is declared or not, it gets added. The amount is payable to different shareholders, right? So if it is declared or not, it has to be paid. So dividend is declared, so it is getting reduced. Okay, so what should you remember for preference dividend? If it is cumulative means, deduct it whether it is declared or not. If it is cumulative means, deduct it whether it is declared or not. If it is non-cumulative, okay, if it is non-cumulative, deduct it only if it is declared. If non-cumulative, deduct it only if it is declared. Okay. So after reducing all these things, whatever profit you have, no, that profit is called as the profit available for the equity shareholders. That amount will what go to your numerator after doing all these things. No, profit minus tax minus preference dividend, the residual amount you are getting, no, that amount is what the profit available to the equity shareholders. That will be shown as your numerator for the basic EPS working. Now, denominator is what? Weighted average number of outstanding equity shares. This is computed by adjusting the change in the equity shares. Now, change in equity shares is your based on the transactions happening in various dates. So, we assign the number of months as weights. Okay, we'll discuss that. If different class of shares, then apportionment of net profit or loss is done over different classes of shares. This also we'll discuss at a later stage. Okay, now before going to that weighted average number of equity shares, let us have a small example like discussion for this profits part alone. Okay, let us assume this example. You can note down the example along with me. Example number 1. Write down this example along with me. PBT. What is PBT? Profit before tax. Rupees 4 lakh. Okay, write down the example along with me. Tax rate 25%. Then 10% cumulative preference shares, rupees 5 lakh. Then 20% non-cumulative preference shares, rupees 5 lakh. Number of equity shares of rupees 10 each is 10,000 shares. This example, okay, just to start with, we'll understand that formula of this example. Okay, PBT is 4 lakh, tax rate is 25%, 10% cumulative preference shares is 5 lakh, 20% non-cumulative preference shares is also 5 lakh. Number of equity shares of rupees 10 each. Okay, So we'll discuss the solution now, how to solve this problem. You're supposed to calculate the basic earnings per share. Okay, now solution. We'll start with the profit before tax, right? Profit before tax. How much is the profit before tax? Rupees 4 lakh. Correct? Now, what did we say? Reduce the tax if any given in the question. Tax rate is 25%. So, minus tax 25%. Use your calculator. On 4 lakh, apply tax 25%. How much is the tax value? Rupees 1 lakh. Balance is 3 lakh. Now, this amount is called as what? This amount is called as what? Profit after tax. Okay, profit after tax. Okay, PBT I have taken from the question. Tax rate was 25%. Apply that percentage on 4 lakh rupees. The balance is your PAT rupees 3 lakh. Right? Now, from this 3 lakh, you're going to reduce the amount for preference dividend. You can see here, it is 10% for cumulative and 20% for non-cumulative. Okay. Now, less preference dividend. Preference dividend. Now, on cumulative preference shares. Now, cumulative preference shares is how much? How much the cumulative preference shares we discussed? It was 5 lakh and non-cumulative is also 5 lakh. But on cumulative, it is 10%. For non-cumulative, it is 20%, right? Now, 5 lakh into 10%. How much is 5 lakh into 10%? Cumulative preference dividend, it is 50,000. So 50,000 reduce. Next, on, I'll write it here, wait, on non-cumulative preference shares, the same 5 lakh rupees, but the rate of dividend is how much? 20%, right? Now 5 lakh into 20% is how much? 1 lakh. Therefore, 1 lakh reduced, right? Now, how much is the balance profit? 3 lakh was your PAT, okay? From 3 lakh, 50,000 belongs to cumulative preference shareholders and 1 lakh belongs to non-cumulative preference shareholders. The balance available profit is 1 lakh 50,000. Now, this 1 lakh 50,000, you call it as what? Profit available for equity shareholders. This you can shortly call it as PAFESH. Okay, profit available for equity shareholders. PAFESH. Okay, PAFESH is what? Profit available for equity shareholders. Right? Now, number of shares is how much? Number of shares is 10,000 shares. So numerator is done. Denominator is directly given in the question, right? Weighted. We don't know the transaction of the shares and all. So we'll assume that this is the weighted average shares. So weighted average number of shares is equal to 10,000. Therefore, basic EPS. Basic EPS is equal to PAFESH, that is profit available for equity shareholders. See, this earnings per share is generally calculated only for equity shares. Okay, only for equity share per share, the earning is arrived at. Okay, now PAFESH is divided by weighted average number of shares. Weighted average number of shares. Now numerator is how much? 1,50,000. Number of shares is how much? 10,000. So 1,50,000 divided by 10,000. Earning per share is how much? 15 per share, which means the enterprise is earning rupees 15 for one share. Okay, for one share, the enterprise is earning rupees 15. Yes. So question la you had PBT, tax rate and everything. So PBT you reduce the tax. So you got PAT. From PAT, you reduce the preference dividend. Okay. Now a preference dividend, in the question they had given you both cumulative and non-cumulative. For cumulative, the rule is what? You will reduce for cumulative whether declared or not, right? For non-cumulative, you will reduce only if declared. For non-cumulative, you will reduce only if it is declared. Okay. Now that is the balance profit is the profit available for equity shareholders. So that divided by the weighted average number of shares will give you the earnings per share. Yes. Is this example clear to you? Okay. Now write a small note. Note. If the enterprise has loss, say for example rupees 1 lakh. Okay, it is a loss. So yeah, rupees 1 lakh. In this case, tax will be nil. For preference dividend, for preference dividend on cumulative preference shares will be deducted. Dividend on non-cumulative preference shares will be nil. Okay. Now, because of this, the Parfish might become negative. Number 4, EPS can be negative. See, we started the example with PBT, correct? Profit. Suppose the enterprise has incurred a loss, say 1 lakh rupees loss. The next step is what? Reduction of tax, right? Now, will you apply tax? See, tax is calculated only when there is profit. When there is no profit, no tax. So tax will be nil. The next tab is what? Preference dividend. Now, when I say preference dividend, what did we discuss? Cumulative and non-cumulative. Cumulative means whether declared or not, you have to reduce. Non-cumulative means only if it is declared, you will reduce, right? So for cumulative, you are deducting. Yes. Now for non-cumulative, it is not declared. See, when there is no profit, how will the company declare dividend? Correct? Right? So non-cumulative you will not reduce. But cumulative you have to reduce. Where cumulative main tool whether it is declared or not, it has to be deducted. So non-cumulative dividend portion will be nil. Now, because of this, your balance profit available for equity shareholders, it will become what? Negative. Loss la 1 lakh la started. Okay. The same example you take. Same example we take. This profit has become negative. Okay, 1 lakh rupees. Okay, the tax is nil. Okay, now this has become as what? 1 lakh rupees negative. Okay, now for cumulative preference shares, 5 lakh into 10% is 50,000. Cumulative, you have to give whether declared or not. So 50,000, right? Non-cumulative is nil, because when there is no profit value, how will you declare dividend, right? So no profit, therefore no dividend declaration. Loss in Gatnala. Therefore, the balance profit out of equity shareholders is how much? 1 lakh and 50. It is negative 1 lakh 50,000. Now negative 1 lakh 50,000 by equity shares. Negative 1 lakh 50,000 is a parfaish divided by equity shares of rupees 10,000. Therefore, your earnings per share is 15. Okay, or you can write it as minus 15 per share. The understanding here is parfaish might become negative. Because of that, the EPS can also become negative. Is that clear? Now, generally, this cumulative preference shares, no, whether it is declared or not, we are reducing it. But obviously, the company is not having profit in that year. Correct, right? So, in that case, what will happen is that 50,000, we will show this as arrears of preference dividend. We show it as what? Arrears of preference dividend. It actually becomes your contingent liability. Okay, it actually becomes your contingent liability, right? See, now what can happen is, now suppose the same example. Okay, we'll take the same example. Next year, okay, next year the company has done so much of efforts and has started seeing the profits. Okay, loss illa, the company has started seeing the profits. Now tell me, now just because the company has started seeing profits, will it consider the previous year's dividend in the current year? No. Arrears are not considered. Okay. You should reduce the dividend only for the current year. Always remember that the dividend is reduced only for the current year. Arrears are not considered. Okay. Because we have already reduced 50,000 in the previous year itself. We have already reduced 50,000 in the previous year itself, irrespective of whether declared or not. Therefore, during the current year, when there is profits, next year when there is profits, it is not necessary that arrears needs to be reduced again. We have to calculate only for the current year. Is that clear? Then one more note you please write. Note, if there is extraordinary item, then 2 basic EPS is calculated. 2 basic EPS is calculated. Number 1, basic EPS with extraordinary items. Number 2, basic EPS without extraordinary items. Supposing there is extraordinary item in the profits arrived during the year, means we have to calculate 2 basic EPS. Okay, one basic EPS with extraordinary and another basic EPS with without extraordinary. Okay, you have just to know the impact because of extraordinary. What is the impact on the EPS? If it is not considered, what is the impact on the EPS? Clear? Now, I move to the next example to understand the weighted average number of shares. Okay, example number 2. Example number 2. I hope Papesh and basic EPS working is clear to you. Okay, just remember for cumulative, reduce it whether it is declared or not. For non-cumulative, only if it is declared. In case of the year seeing losses, you reduce only for cumulative and not for non-cumulative. Okay. Second example. This you are going to do to understand weighted average number of shares. Okay, because your previous example, we just had the flat number of shares as what rupees 10,000. So அப்படியே we just took it as the denominator and we found out the EPS. Now let us learn this. Papesh 3 lakh. Opening balance of equity shares of rupees 10 each. Rupees 10,000. Equity shares issued on 1/7/21, 8,000. Equity shares bought back on 1/10/21, 6,000. Calculate EPS for financial year 21-22. Is it in? So Parfetch is 3 lakh. Opening balance of equity shares in the year, in the beginning of the year. Okay, the equity shares on the 10,000. Then during the year on 1/7/21, fresh shares have been issued. Fresh issue of shares is what? Company is seeking money from the public, right? So fresh issue of shares on 1/7/21, 8,000 shares have been issued. Now later, equity shares bought back. Bought back is what? Buyback. Company buying the shares from the shareholders. In turn, company is giving cash, buyback. So equity shares bought back on 1st October 21. That is 6,000 shares. Now they want you to calculate the EPS. Right? Now, solution. Weighted average number of shares. Right? Please listen. Opening balance of shares 10,000. Okay. The next transaction is issue of shares. When this is happening? On 1/7. Now opening balance means the date would have been what? 1/4/21. Correct? Now fresh issue is happening on 1/7/21 of 8,000 shares. Now when I say fresh issue, your number of shares will get increased or decreased. Fresh issue means your number of shares will get increased. Correct? So from 1st July, the number of shares have got increased by 8,000. Correct? Now till 1st July, it was only 10,000. Correct? Till 1st July, it was only 10,000. After 1st July, it has become 10 plus 8, 18,000. Now till 1st July, it was only 10,000. Therefore, 10,000 into how many months? April, May, June, 3 months. 10,000 has been utilized by the company for how many months? April, May, and June as 3 months. Right? Now, come to the next transaction. On July, it has been 8,000 fresh issue. Later, the next transaction after that is what? 1st October. Now, 1st October is what? Bought back. When you buy back, the number of shares will get reduced. When you buy back, the number of shares will get reduced. So, from 1st October, or 6,000 shares, the number of shares have got reduced, right? So 10,000 was the opening balance, 6,000 is a fresh issue, 8,000 is a fresh issue. So 10 plus 8, 18,000. Now this 18,000 has been in use till 1st October. 18,000 has been in use till 1st October. Why 1st October? Because on 1st October, it has been a buyback. So it was the number of shares had remained at 18,000 till 1st October. So how many months? From 1st July to 1st October. How many months? July, August, September. How many months? July, August, and then September. How many months again? 3 months. Right? So from on 1st July, it became 18,000. But this 18,000, it had remained as 18,000 till 1st October. Right? Now from 1st October, is there any transaction after 1st October? No. Right? 1st October was the last transaction. Now from 18,000, because of buyback, it has got reduced. So from 18,000 minus 6,000 has become as what? 12,000. Now this 12,000 has remained till which date? From 1st October to 31st March. So October, November, December, January, February, and March. 6 months. Okay. So how do you compute this weighted number of shares is 10,000 shares into 3 divided by 12. Okay. Because it is from 1st April 21 to 30th June. Why are we doing this? Because I'm just writing it here. It is issued on 1st July. So 10,000 was used for how many months? 3 months. Right? I am putting plus here. Okay. Then the next lot is what? Fresh issue of shares of 8,000 shares, right? So 10,000 plus 8,000, it is 18,000. But this 18,000 had remained till which date? 18,000 had remained till which date? It is from 1st July to 1st October. 1st July to 1st October, right? 1st July to 1st October. So July, August, and September, again 3 months. This is for the period 1/7 to 30th September. Okay. Now again plus. Now this the balance is how much? 18,000. Now out of 18,000, 6,000 was bought back. Therefore, number of shares has got reduced to 12,000. Now this 12,000 for how many months? 6 months. How come it is 6 months? From 1st October to 31st March. Yes. Now give me the figure. 10,000 into 3 by 12. 2,500 plus 18,000 into 3 by 12, 4,500 plus 12,000 into 6 by 12, 6,000. So your total weighted average number of shares 6,000 plus 4,500 plus 2,500. 13,000 is the weighted average number of shares. Okay. This is issued, therefore added. Okay, I'm writing very shortly. You people write neatly in your notebook. And these things you need not write. I'm writing it for your understanding. It is bought back, therefore it is reduced. Clear with the working, ma? Okay. So when you consider the number of months, just check for the next transaction. Okay. Till that date, compute the number of months. Okay. And when you accumulate the number of shares, just see whether it is issued or bought back. Issued means you can add it. Bought back means you have to reduce it. Okay. Now the question is what they want you to calculate the basic EPS. Yeah. So we'll calculate the basic EPS. Basic EPS is equal to, I'm writing it here itself. Basic EPS is equal to Parfaish by Parfaish, that is profitable for equity shareholders, divided by weighted average number of shares. Weighted average number of shares. Okay, now how much was Parfaish given in the question? 3 lakh. 3 lakh divided by 13,000. 23 point some odd figure, 23.08. Okay, wow. The EPS 23.08 per share. 23.08 per share. Clear? Okay. Now, having said this, I will tell you the importance of this weighted average number of shares. See, actually what has happened here, we have considered the number of months as the weight. We have used the shares with time factor. You are applying this number of months, right? This number of, I hope you have copied everything. I'm using this color. This number of months you are using, no, into 3 by 12, into 6 by 12. Why am I doing this? The shares with time factor is considered. Shares with time factor is considered. Okay. Now let us take the same example. Okay, the same example. Opening balance was 10,000. I'm moving to the question here. Opening balance was 10,000. Okay. Now fresh issue of shares is how many shares? 8,000 shares. Okay. Supposing the fresh issue of shares has happened on 31st March. Okay. Opening balance is 10,000. This fresh issue of shares now 8,000. This has happened on 31st March. We generally what we will do, 10,000 is the opening balance. Ignore weighted average now. Okay, don't think of weighted average now. Just do the normal working. Okay, just do the normal working. Opening balance was 10,000. So fresh issue is 8,000. Therefore, denominator is 18,000. Profit is 3 lakh. Therefore, 3 lakh divided by 10,000 plus 8,000 is 18,000. So how much is the EPS here now? 3 lakh divided by 18,000. 16.667. Okay, but if we had applied weighted average concept, how much would have been the denominator? It would have been what? 3 lakh divided by 10,000. Why? Because the fresh issue has happened on 31st March. As on 31st March means for the full year, the number of shares had remained how much? It was only 10,000 shares. It was not 18. 18 happened only from 1st April 22. Next financial year, it became 18,000 because the fresh issue happened on 31st March. Year end, the fresh issues happened. Therefore, during the entire year, the number of shares had remained at only 10,000. So 3 lakh by 10,000, my earnings per share is how much? 30 per share. Whereas, if you had not considered this weights, okay, the time factor is not considered means the earnings per share is how much? 16.67 per share. Now tell me whether this is right. No, this is wrong. This is only right. You have to consider the time factor, which is important. Clear? Just because the shares have been issued on 31st March, they cannot enjoy the profits. Okay? They cannot enjoy the profits. So based on time factor, the number of shares are being arrived at. Is that clear? So as far as basic EPS is concerned, it is par face divided by weighted average number of shares. Par face, you have to reduce the tax and then ensure that you give the impact for the preference dividend, okay, cumulative and non-cumulative. And then for weighted average number of shares, you have to calculate it with the time factor, which is based on the number of months, okay. See the next transaction, what is happening. Based on it, compute the number of months, okay. I'll give you one homework. And I want you people to try it. Note down this homework. Parfish 1,20,000. Opening number of shares 20,000. Issued on 1st August 21, 10,000. Issued on 1st January 22, 5,000. Buyback on 31st March 22, 7,000. Okay. I'm just giving you a glance for the working. Opening is 20. Okay. It has remained 20 for how many months? Till 1st August. So how many months? April, May, June and July. 4 months. So again, you'll add 20 plus 10 as 30. Now, after 30,000 has remained for how many months? From 1st August to 1st January. So how many months? August, September, October, November, December. 5 months. Right? So 30,000 had remained for 4 months. Now, again, it was only fresh issue only. So 30 plus 5 is 35. Now 35 has been there till how many months? Jan, Feb and March in for 3 months. Right? Now 35 is there. Now this case 7,000. 7,000 is a buyback as on 31st March, right? It is as on that stage. That has been for how many months? You don't know the number of months here, right? So you just calculate as 35 minus 7,000 for your buyback. Okay, I want you to give me the answer for this. Yes, next heading. Write the next heading. Partly paid shares. Write the heading. Partly paid shares. Done. So in case of partly paid up shares, how do you consider the weight means? It is considered it's actually counted as a fraction of equity shares. Okay, and the ratio will be the amount paid up to the face value, amount paid up to the total face value. The ratio will be what? Amount paid up to the total face value of the share. Is that clear? This is what you are supposed to do it for partly paid shares. We'll again discuss this with an example. Example number 3. Let us assume Parfaish is 10 lakh 50,000. 10 lakh is 10 lakh 50,000. Okay. Next line. Opening number of shares on 1st April 21. 80,000 shares of rupees 10 each, fully paid. Next. Issue of shares of rupees 10 each. Underneath that, number of shares issued 60,000. Application money received on 1st August 21, rupees 4 per share. Next. Allotment money received on 1st Feb 22, rupees 4 per share. Calculate EPS for the year ended 31/3/22. So this is a question. It says Parfage is 10 lakh 50. Opening number of shares is 80,000 shares. Okay, opening balance. Okay, open number of shares 80,000 shares for rupees 10 each, fully paid up. Now, during the year, issue of shares has happened of rupees 10 each. Okay, you would have stated in intermediate, when the company goes for issue of shares, there are actually various stages, right? What are the stages? Application money, allotment money, first call, second call. I hope you remember all this, right? Forfeiture, reissue, right? So similarly, the shares have been issued as 60,000 shares have been issued. Face value is rupees 10. Okay. Now, during that year, on 1st August, the application money has been received for 4 per share. Then allotment money has been received on 1st February. Okay. Allotment is received on 1st February. Now, has the entire 10 rupee face value received? No, it is partly paid. They want you to calculate the EPS for the year ended. Okay. Now, we don't have any working for Parfish because Parfish is actually given to us as 10 lakh 50,000. What is Parfish? Profit available for equity shareholders. The net profit or loss attributable to equity shareholders and Parfish both means the same. So numerator is already given the question directly. You don't have to bother on that. So we have to do the working only for weighted average number of shares. Okay. So solution. Weighted average number of shares. Okay. Now, please listen. First one. Opening balance is how much? 80,000 shares. Now, this 80,000 shares has remained as 80,000 for how many days? For how many months? I'm sorry. Till the fresh issue has happened. Now, fresh issue, it is happening on which date? It is happening on 1st August. Correct? Fresh issue is happening on 1st August. So, how many months here then? April, May, June, and July. Right? So 80,000 into 4 by 12. The first slot is 80,000 into 4 divided by 12. How come it is 4 divided by 12? I mentioned the date here as from 1st April to 31st July because on 1st August the fresh issue has happened. Correct? So this will mention it in the brackets. Plus. Now, plus will be the second one. The second one is what? 60,000 shares have been issued. Right? Now, 60,000 out of the shares, application money has been received on 1st August for 4 per share. How much application money received? As 4 per share. So, what do we say? In case of partly paid share, how do you count it for this weights? How do you count it? It is taken as fraction of equity share. Okay, it's taken as fraction of equity share. And when I say fraction of equity share means what is the ratio? Amount paid up to the total face value. Amount paid up to the total face value. Amount paid up to the total face value. So it is 4 divided by 10. 4 divided by 10. Is that clear? So what we will consider here means 60,000 is the, I'm putting another bracket, okay? 60,000 is the number of shares, okay? That into amount paid up to the total face value, right? Now tell me how many number of shares? 60,000 into 4 divided by 10. 24,000, right? Now this is 24,000. Correct? Now tell me this 24,000 has been increased in your increased to your opening balance of shares, correct? 24,000 has been increased to your opening balance of shares. Therefore, it is or else I'll do the working in the I'll do the working here. 60,000 into 4 divided by 10, that is 24,000. So 24,000, I'll close this bracket. Another bracket I'll mark it as 80,000 plus 24,000. Okay. This into number of months. We will do the main workings alone here. So here we'll mark it as 80,000 plus 24,000 into. Okay. See, 60,000 shares have been issued. Okay. Application money has been received for rupees 4. Therefore, total amount paid up to the total face value, so into 4 divided by 10, it is 24,000 shares, right? So now opening balance was 80. Because of fresh issue, 24,000 is added. Now this has been remained as 1,04,000 for how many months? From 1st August to 1st February, correct? From 1st August to 1st February. How many months? August, September, October, November, December, and January. August, September, October, November, December, and January for 6 months. So 80,000 plus 24,000 into 6 divided by 12 plus. Now the total share is how much? 80 plus 24, it is 1,04,000 shares. Okay. Now 1,04,000 shares has been in use for how many months? From 1st February to 31st March. Correct? 1,04,000 has been used from 1st February to 31st March. So how many months? It is for 2 months. Okay. Now I can't just go ahead with 1,04,000 because on 1st February, allotment money has been received, right? Allotment money has been received for how many number of shares? Same 60,000 shares. Again, how much is the amount of allotment money received? Amount paid up to the face value. So how many number of shares? 24,000 shares. Now here, this date I am mentioning it as 1/8 to 1/2. Okay. Now this will be 1,04,000 plus 24,000. This into how many months? 2 divided by 12. Okay. How come this 1,04,000 came? You should not wonder. It is 80,000 plus 24,000. This 2 by 12 is how come? 1st February to 31st March. Let us first arrive at the answer. Excuse me. Extremely sorry. 80,000 into 4 by 12. 26,667 plus 1,04,000 into 6 by 12 is 52,000 plus 1,04,000 plus 24,000 2 by 12 is 21,333. 1 second. Just 21,333. Okay. Now sum up all the figures. 26,667 plus 52,000 plus 21,333. Totally it is 1 lakh shares. 1 lakh shares. Okay. Now, see, let me explain you the working again for the number of shares. Please pay attention. Please pay attention. See, 80,000 is the opening balance of number of shares, right? Now, 80,000 shares has been in use for how many months till the fresh issue happened? Now, fresh issue has happened on 1st August. Therefore, April, May, June, July, it is 4 divided by 12. Right? Fine. The next transaction is on fresh issue. Now, fresh issue 60,000 has been issued. On which date? On 1st August 21. Now, first, before going to the number of funds, let us first decide on the number of shares. Now, I haven't received the money for entire 60,000 shares. The face value per share is rupees 10, but I have not received the entire money on that 60,000 shares. It is only partly paid, which means first application money for 4 and then allotment money has been received for rupees 4. Right? So the amount paid up divided by the total amount paid up divided by the total face value of the shares. Therefore, it is 60,000 into 4 divided by 10, which is 24,000. 60,000 into 4 divided by 10 is 24,000. Now, this 24,000 shares needs to be added to your opening balance of 80,000 shares. So, it is 1,04,000. Now, this 1,04,000 shares has been in use for how many months? It is from 1st August to 1st February, which is 6 months into 6 divided by 12, therefore 52,000. Now the third slot is already opening balance is 80, fresh issue for 24,000, so 1,04,000. Now the next thing is allotment money has been received on 1st February. Okay, now allotment money received is on 1st February. Now for this slot, okay, again only 4 per share is paid up. Therefore, 60,000 into 4 by 10 is 24,000. Therefore, 1,04,000 plus again another 24,000. Together it is 1,28,000. On that, how many months? It is 2 by 12. How come? Because it has been received on 1st February. Therefore, February and March together it is 2 months. Right? Therefore, it is 21,333. Now, summation of all these figures will give you the weighted average number of shares as 1 lakh shares, right? Now, last thing is what? You have to suppose to calculate the basic EPS now, right? How much is the basic EPS? I'm sorry. Now, the basic EPS is equal to 10,50,000 is the parfish, right? You can see the question is 10,50,000 was the parfish given in the question. So 10,50,000 divided by weighted average number of shares is 1 lakh. Therefore, your basic EPS is 10,50,000 by 1 lakh, 10.5 per share. Rupees 10.5 per share. Is that clear? Yes. This is basic EPS 10.5 per share. Now, another alternative is instead of calculating on terms of number of shares, you can also calculate it in terms of a rupee. That is called as weighted average capital. Everything in terms of rupees. Weighted average capital. Okay, this is not so important, but it is alternatively. Okay. Now, 80,000 is the number of shares. Correct? Face value per share is 10. Okay. Now it is what? 8 lakh. Second slot in second slot is what? 80,000 plus how many shares? 24,000 shares. So 80,000 plus 24,000. This again into rupees 10. So 1 lakh 4,000 into 10. This is 10 lakh 40,000. Okay, you're converting it in capital terms. Now, third slot was what? 1 lakh 4,000 plus 24,000. This is 1 lakh 28,000 shares, right? These are all in shares. Okay, 1 lakh 28,000 shares into face value 10. So it is 12 lakh 80,000. Okay, now do the weights. How do you do the weight? Same number of months, everything same. 8 lakh into one more zero, right? 8 lakh into 4 divided by 12 plus 10 lakh 40,000 into 6 divided by 12 plus 12 lakh 80,000 into 2 divided by 12. You will get 10 lakh. Because 1 lakh was the number of shares. Into 10 means what? It is 10 lakh. Okay, this is in terms of rupees. There we arrived at the number of shares. Okay, here it is what? Rupees 10 lakh. Everything multiplied with the face value. Okay, now the earnings per share here it will be earnings per share. Earnings per share, you should call it as what? Earnings per rupee. Okay, it is not per share, right? You call this as earnings per rupee. Now, earnings per rupee is equal to 10,50,000 divided by 10 lakh shares. So, how much is that? 10,50,000 divided by 10 lakh shares. 1.05. Now, this 1.05 per rupee, which means for 1 rupee, the company is earning 1.05. For 1 rupee, the company is earning 1.05. Okay. Now, from this 1.05, can you guess EPS? Yes. Earnings per share, how will you arrive at EPS now? The face value is rupees 10. Therefore, 1.05 into face value rupees 10. So, 1.05 into 10 is 10.05 per share. This is what we got, 10.05 per share. Is that clear? Sorry, it's 10.5. Okay. Now, weighted average capital is you're multiplying the number of shares into face value and then multiplying with the number of months, okay, to arrive at the total capital, weighted average capital, which is 10 lakh. So, Parfesh by 10 lakh will give you the earnings per rupee. Clear? No. Write the next heading. Two different class of equity shares. Two different class of equity shares. Now, class of equity shares means 10 face value, 10 is fully paid. And another thing is 5 is the face value and 5 is also fully paid. It is not partly paid. The face value itself is only for 5. Okay, the face value is only for 5 and the entire money 5 is paid. That is called as the class of shares, two different class of equity shares. Okay, we'll solve this all with example. Example number 4. Example number 4. Parfesh 8 lakh. Equity shares outstanding during the year. Equity shares outstanding during the year. Now, class A, 20,000 equity shares of rupees 10 each, fully paid. Class B, 40,000 equity shares of rupees 5 each, fully paid. Okay, Parfesh is 8 lakh. Equity shares outstanding is for class A. It is 20,000 shares of 10 each fully paid, and class B is 40,000 shares of is 5 each fully paid. Okay. Let us start this working solution. You will uh, you will actually find such type of question class of shares in valuation chapter. Okay, you have valuation of equity shares, valuation of goodwill, right? In that chapter, when you discuss valuation of shares, you'll be discussing various methods, fair value, intrinsic value, and all, wherein the class of shares will be very much common in that chapter. Okay, so we'll discuss in detail while doing valuation sums, but right now for EPS you just understand the concept. Now solution is, see, the face value is rupees 10. 10 is fully paid. Another face value is rupees 5 and the 5 is also fully paid. Now what we are trying to do is, we are trying to make it as equivalent number of shares. Okay, we're trying to make this 5 as what? Equivalent number of shares. Okay, now sorry. Equivalent number of shares of rupees 10 each. Okay. Now for class A, the number of shares was 20,000, right? Plus for class B, it was 40. Okay. But the face value is how much? 5. Now I am going to make this 5 as 10. I'm going to make this 5 as 10. Okay. Now it is 40,000 into 5 divided by 10. Okay, 40,000 into 5 divided by 10. Now 40,000 shares are at the rate of rupees 5. I want them at the face of rupees 10. I'm converting it for 10 rupees. Okay. So 40,000 to 5 by 10 means it is 20,000 plus 20,000 is equal to 40,000. 40,000 shares. Okay. First find out the equivalent number of shares. Now the second one is EPS. Now find out the EPS. EPS is, you have to find out two different EPS for face value 10 and then for face value 5. See, first of all, why am I doing this equivalent number of shares means you have only one parfish, right? That parfish has to be divided at the common face value. Now, the common face value can't be different as 10 and 5, right? So, you're trying to bring the equal number of shares, okay, wherein the denominator would be the same. So, it is 40,000 here. Now, EPS is equal to, for face value, rupees 10. Partage is 8 lakh divided by number of shares is 40,000, the total number of shares. Therefore, the EPS is 8 lakh by 40 is 20 per share. It is 20 per share. Right? Now, how we will write here means EPS for class A share. Now, for class A share, it is not a problem. Therefore, it is rupees 20 per share. Right? Now, EPS for class B share. For class B share, you can't take the same 20. Why you can't take 20? Because the face value is rupees 5. Whereas you have computed this 20 for 10 rupee per share. Correct? See, class A is 10 and class B is 5. For class A, it was 10. Okay, so you can take directly as 20% is 40,000 shares. So you can put it as 20 per share. For class B, the face value was 5 per share. We had found the equivalent number of shares as 40, wherein you made it equivalent to rupees 10. Okay, now the 5 has become 10 here. That is why the denominator has become 40,000. Correct? Now the face value is for 10 only, the EPS is 20. Now the face value is 5. Then in that case, how do you arrive at the EPS then? So if the earnings per share is 20 for rupees 10 as face value, then for rupees 5, how much is the EPS? So 20 into 5 by 10. 20 into 5 by 10, which is rupees 10 per share. Okay, 20 rupees is the earnings per share for rupees 10. For 5 rupee per share, how much is the earnings then? 20 into 5 divided by 10, which is rupees 10 per share. Okay, so in your question, if you had been given different classes of shares, first of all, make the classes to be equal. Okay, so equal number of shares are the first you have to convert, find out. Then based on that, find out the EPS, right? Now that EPS will be for the highest face value. The second EPS will be the face value for the different class which he had worked out for 5 rupee or 2 rupee, whatever is given the question. Okay, so adu பண்ணும்போது you have to take it in a proportionate manner. For 20, it is for 10 rupee face value, 20 was the EPS. For 5 rupee face value, how much is the EPS? So like that way, you have to work out the EPS for the different classes of shares. Clear? Is that clear? So weighted average number of shares, we discussed the time factor, and then partly paid shares we discussed based on the amount paid up divided by the total face value, and the number of months as usual, as we use it for weighted average number of shares, you have to compute the number of months also. And then we discussed on the classes of equity shares. Okay, different classes of equity shares. Is that clear to you?